Hi, Paul Durso here, and I had a client in my office not too long ago that watched our last video called Quit Drinking the Mutual Fund Kool-Aid, and he said to me, I'll take your 80s pun and I'll raise it and say, where's the beef? If I don't need to be paying attention too much to my asset value, stock price, or net worth, where's the beef? What should I be paying attention to? So what I have here is a chart of a stock, Duke Energy, right here in Charlotte, that a lot of people own, they understand it, and what I want to share with you is where the beef is when you're looking at a stock, at least a dividend producing stock. So this yellow line here represents the stock price, and I'm going all the way back, you may not be able to see that, but I'm going all the way back to 1996. And I'm going from 1996 all the way to 2017, the end of 2017. So we got roughly a 20-year period in here, a little over. And what I want to show you here is the stock price. And as you can see, the stock price has been all over the map. It's gone up, it's gone way down, it's gone up, it's gone down, it's gone up, it's gone down, it's gone up. Now the overall trend has been slightly up over the last 20 years, but it has been a roller coaster ride looking at this stock. And I can tell you, there's been plenty of times where a lot of people would probably want to sell Duke stock. But what I call that is I call this orange line here the cover of the book. It's not necessarily what's inside the book, it's the cover of the book. What's inside and where's the beef is what you're going to see all these blue lines down here. These are representation of the stock dividend. The money that's being paid to clients, to owners that have that stock. And as you can see here, these dividends, this is they spun off another company, so this is an abnormality, a great abnormality as you can see. But these stocks right here, they've never gone down, they've always gone up, and they've always paid every single quarter, every single year. You're gonna see these stock dividends being paid out. Regardless of the volatility and how bad things were, stocks pay, or dividends paid. No matter what the net value or asset price of that stock, it paid its dividend. This is the beef. This is the meat inside of a stock portfolio. A dividend stock paying, a stock paying dividend inside of your portfolio. This is the most valuable asset that you have, which is the dividend, because this is nothing more than a headache. It drives you crazy. We hope to see growth, but we count on our income. We need our income. I had a client in my office not too long ago, this last week actually, and she said, and she's not a client, she's looking to become a client, and she goes, so let me get this straight, you want me to buy stocks? She goes, I don't want to buy stocks. She goes, you might want to buy stocks for me and be good at that, but I'm scared to death of stocks. And I said, why are you scared to death? And she goes, because of all the horror stories, people have lost so much money in stocks. And I said, really? And she goes, well, I'm speaking from personal experience. I said, tell me. She goes, well, when I was 20 years old, I was gifted $15,000 worth of AT&T stock. And I immediately lit up because that's a stock that we've held in our portfolio. And I was like, really? And my first question is, do you still own it? And she goes, no, I sold it. She goes, I was given it when I was 20 years old, $15,000. And like a lot of stocks, it went up in value and down in value. And earlier in the century, in 2000s, she goes, it had lost so much money that I said, I can't even stand it anymore. Everybody wanted to sell it because it was losing tremendous amount of value. So I got rid of it. You know what's sad? She goes, I sold it for less than it was given to me when I was 20. And I sold it when I was in my 50s. And she's like, why would I want to embark on that ever again? And I pulled up a website that actually went back in time and showed her what was actually happened in her stock, because AT&T pays a dividend, and she was paying heavy attention to the stock price. And truth be told, she was gifted about 100 or so shares, or a little bit more than that, way back when. And she had 15,000, might not have been actually when she was 20, it might have been a little bit later than that. I don't remember the exact numbers. But what we found out is she was gifted somewhere between right around 130 shares. And that 130 shares and that $15,000 value over the late 80s, 90s, and into 2000 had just gone up, way up, and then way down. And when it got deep into the red, she's like, I'm selling this. She sold it for like $12,000. What she didn't realize that behind the scenes, she had all this dividend income. It was buying her more and more and more shares, even though the share price was falling off a cliff. She was buying more shares. And then I showed her if she would have held it to today, to 2018, she would have over 900 shares of that stock, paying her dividend of nearly $2,000 a year. She was gifted $15,000. And today that would be paying her $2,000. So whenever I'm asked, where's the beef? You know, where's the real thing that you should be paying attention to? Because everybody's looking at the value. And I call that the cover of the book. It's not the meat of the book. If you want to see the real meat of what you have in light of this market volatility that seems to be robbing so many people of wealth, and it's scary, there's more to the story. And if you want to read a really good book, pay attention to dividend or income producing investments, because they can be just as volatile as the market, but they can be amazing when it comes to paying income. Okay, Paul Durso, hope you enjoyed this. We'll be back at it again soon.